Good afternoon, traders. This video is all about my trading plan for March. It's specifically for day trading during the pre-market, but either way, I'm sure there's a lot that you can learn that you can apply to whatever session that you trade in. And first, let's tell you how to get this document. Just go to my YouTube channel, Trading Armor, click on the little Facebook icon. Make sure you are subscribed to the channel, of course. Click on the Facebook icon and then become a member, and that'll give you access to all of the files that I share, including my trading plan, my trade tracking spreadsheet, my 2R calculator, all that cool stuff. So check that out. So let's go over the trading plan. I've been trading this plan since about the end of November of 2020, and it's working out really well. I've been looking for all the weak spots, tightening it up, making it simpler, and just looking for all of the weaknesses and making it as strong as I can. And so far, it's been very effective this month. Nothing but green on the chart per day. There's just one red trade there. Not that I expect that to be normal. This is 2R trading, so anything above a 40 to 50% win rate is good. Right now, I'm about 83% win rate, so I'm expecting a little bit of a pullback from that. But this is just simply the result of trading this plan and this strategy and good setups working out, which we all know they don't always work out, and that's why you always use stop losses. That's all built into this plan. So let's go over the plan step by step. Number one thing, read daily before trading. I firmly believe that no matter how long you've been trading, that you should read your plan every single day. You want it as fresh in your mind as possible. Crazy things can happen while you're in the middle of a trade. You can forget something out of the ordinary happens you haven't seen in a while, and it trips you up. So at least if you read your trading plan every day, you know that you've done everything to the best of your ability to prepare for the trade day. So number one on the trading plan, this is pretty new, and really probably the most important thing is check your internet connection before trading. I had a strange day last month where I had internet connection, but I didn't have an upload connection, which is really weird. I'm sure that's happened before, but you don't really notice things until you're day trading and see the effect of it. But I noticed that Webull seemed like it was having trouble refreshing the chart, and I would hit refresh and the candles would reappear, and I thought it was Webull, but it was actually my internet connection. You can see here my upload speed is about 5% of my download speed, and that's normal for a cable internet connection, which is what I have. But on that day, the upload speed was essentially 0. So that was the problem that day, and that's why this is the first thing I do every day before I start trading, check my internet connection. If I don't see numbers very close to these, like within 1 megabyte, at least on the upload speed, maybe 2 or 3 on the download. But if I don't see numbers very close to that, I don't even bother trading. Your internet connection is everything. Doesn't matter how good your plan, your strategy, or your platform is. If you don't have a good internet connection, it's useless. If anything seems out of the ordinary with Webull, don't trade. If Webull isn't working exactly as it should, don't trade. So there's a lot of redundancy in this plan. That's pretty self-explanatory. If I notice that Webull is very glitchy or some other weird thing is happening, it's better just to not trade, because I tend to lose money if I try to trade when the platform isn't working perfectly. And of course, that's not just a Webull thing. That can happen with any platform, even the paid platforms. So that's something that you should apply, I think, to any trading platform. Only enter on the first pullback of an ABCD pattern. Now, this is getting into the very specific things that are part of my plan. This might be different for you, but I have designed this plan so that I'm only taking the absolute best setups with the highest probability of working out. And that way, if they don't work out, I can say, hey, look, I did everything I could, and I'm willing to accept this loss because, hey, even the best patterns fail sometime, but at least I'm only picking the very best. So this isn't a, hey, let's just trade good setups. This is, let's trade the best possible setups that we can find, and don't trade if we don't find those. So only enter on the first pullback of an ABCD pattern. That is the absolute safest entry based on my own personal experience and what I've seen other traders with much more experience than I have. Also, they recommend that as well, but I've proven that with over 4 months of data collection with probably over 300 or 400 trades now. And I'm reminding myself, if I miss it, I miss it, to not try to get in the second pullback, because even though that's still a pretty safe trade, the probability of that one working out probably goes down to 50 or maybe even as low as 40 or 35% of working out. So I just don't even bother. If I notice that I missed the first entry, I'm done with that stock, and I just move on to something else, or I shut down the platform if my time is up. The first pullback of an ABCD pattern is always the safest entry. if it's the first ABCD pattern of a new high. So we only want to take the safest entry, even if riskier entries sometimes work out. This is a lot of redundancy and reminders built into my plan, because if you've been trading for any length of time, you know that if your plan isn't written very specifically, if you just say, hey, I only trade the ABCD pattern, I only trade the first pullback, you can start to convince yourself of entries that are not really part of your plan, but you kind of talk yourself into them anyway. Oh, it's still an ABCD pattern. It's the first pullback of the second ABCD pattern, whatever. You get the idea. So that's why this is so explicitly written and with tons of redundancy, so that I know exactly what really is part of my plan and what isn't. If you miss an entry and there are no others before 5 a.m., this is a rule I'm following for now. I start trading at 4 a.m. and I don't want to trade for more than an hour right now. So this is my rule. After 5 a.m. here, I'm just reminding myself that, hey, look, it's not a bummer if I don't get any trades between 4 to 5 a.m. It's still can be a good thing, a good opportunity to exercise discipline. That's always a great thing as a trader. Save capital, save your money for when things are better, and to make a no trade video to set a good example. So I'm always thinking about other traders as well that I'm trying to help. When I help you guys, it helps me, because look, I'm developing extremely good, strict habits here, and trying to help others do the same. So always let the stock establish a new high as compared to the previous session, then let it pull back by at least one candle, and then you can enter for the break of the first pullback candle, but no sooner. No micro pullback entries. So if you watch my live trade recaps, you'll get a better feel for what all of that stuff means. But basically what I used to do, so this is a representation of the pattern that I'm saying that I'm looking for. Here is a green candle that started down here and then closed up here, and then the next candle opens lower and closes lower. So now I can look, and it doesn't even matter really that it opened lower. It could open higher as long as it closes lower. Then I can look for the next 1 minute candle to make a new high, but this is even better. So no micro pullback entries means that I can't say try to catch the pullback of one single candle. And again, you watch my trading video. I can't explain everything in this one video. It's already going to be a long video, but just keep watching my live trade recaps and you'll get a better feel for all of this stuff. Consider trading the number one volume stock. That's a fairly new rule that I've been using for a couple of months, and it's worked out really well. I used to only trade stocks that were a float size of about 100 million shares or less. And I noticed that a lot of times the number one volume stock had so much volume that the float size didn't really matter. It could be 200-300 million share float size, but the volume is there, so the price still moves. And that's the whole idea behind the lower float size trading anyway, is that it takes less volume to move the price a lot. But if you have tons of volume, it doesn't really matter. So that's where that is. I mean, if you're in the billions of shares, then you may want to stay away. But this is still a pretty good rule that I follow every single day. And then price range, that's going to be unique to you. Right now, I'm only trading stuff below $25 and above about $1, $1.50. Don't even check stocks until they're in the top 3 volume. This is a really important rule that doesn't seem like a big deal at first glance, but this actually happened to me one day where I was looking at stocks below the top 3. And again, this is my personal thing. You might say, oh, I'm going to trade the top 5 or whatever, but this still applies. Just change that number. So I only trade stuff in the top 3. So at the moment that I was trading, there was nothing really good going on with those stocks. So I started looking at stock number 4, 5. I noticed that the volume was increasing, so they may end up in the top 3, but they weren't at that time. I even put them on my watch list, and I started looking at the chart, and I saw a good pattern set up, and I took a trade. The trade failed, and the point is that not so much that the trade failed, but I took a loss that I didn't need to take because I wasn't even supposed to be trading that stock because it wasn't in the top 3. So that's the reasoning behind that, and hopefully you starting to see like a running theme in my plan. There's a ton of redundancy. There's a lot of very strict rules, and it's just to keep things very simple, and so that I'm only looking for a few opportunities, and that's it. And that way also at the end of the day, I'm not saying, well, I shouldn't have traded that. You know, my plan is so well defined. I know that, hey, I should have traded that, or I did trade that, which I should have. And even if it lost, it's built into my plan that I'm supposed to take a trade on that, so I don't have to feel bad about the loss. You only really feel bad about the loss when you go outside of your plan or your strategy, or you break a rule or something like that. So if a stock pops up in the top 3 but has already finished one ABCD pattern above the previous high, then you missed the entry and should remove the stock from your watch list. Again, you see how much detail there is built into this plan, so there's absolutely no question about what I should do in every variation and situation that I might come across. So, and another reminder, the first pullback of the first ABCD pattern is the safest and only entry we are interested in. This doesn't allow me to talk myself into any other entry. If you see a spot that you know you would have taken an entry, then you know for sure you missed your opportunity and you should not take an entry at this point. Again, there's no question about whether or not I should be taking an entry that I see. Don't forget to check, mark the high of the previous session and the previous day. I don't always mark it, but I do check it every single day, and I always look to see, now I don't really need the marker there. I can really quickly scan the chart, look at the previous day and the previous session, and know whether or not the price is higher overall and if I should look for an entry. So, this is the criteria for looking for an entry. Price must be higher than the aftermarket and the previous day in order to take a trade. So that's not all that's required, but I definitely can't take a trade if that stuff isn't met. At 4 a.m., keep restarting Webull until top gainer screener shows only green stocks. If you trade at 4 a.m., you know that the Webull screener has a little difficulty transitioning from the previous day to 4 a.m., and that may not be unique to Webull. That may be something that just goes on in the stock market when you start a new day like that. So it generally takes about 15 or 20 seconds of shutting down, restarting before, right at 4 a.m. or right when I notice the watch. I'll show you really quick here what I look for. I have it set to top gainer pre-market, and I look for this list to change because right now, here we are on the 4th, and it's in the aftermarket right now, but this is still based on what happened on the pre-market from today. So tomorrow on the 5th, even at 4 a.m. or 4:05, at like 4, let's say it's 4 o'clock and 30 seconds, this will probably refresh at that time, but it doesn't do it very smoothly, and you'll see what I'm talking about if you do this a few times, and you just need to shut down the platform and reopen it until it looks right, which means you're going to see a bunch of green stuff here. And you'll see green on this chart because it's the top gainers list, so you should be seeing almost all green here. So again, this thing flipped because it's showing after hours. During the pre-market, this will say pre-market. This is very different right now. Things in the aftermarket work very differently. So let's get back to looking at the plan. Let's see, remember that it's always possible there will be nothing to trade. This is, again, a very important thing to keep in mind. You shouldn't force trades. That's something I used to do when I was a younger trader. When you don't see exactly what you're looking for, don't take a trade. There's no reason to do it. You're putting yourself at higher risk. You're more vulnerable. Yes, sometimes those risks that don't perfectly match your plan, those trades that don't perfectly match your plan may work out. But why would you take the chance when you know that even when you do absolutely everything right, there's still a chance you're going to lose, and a pretty good one? So if no setups are forming with the top 3 stocks by 5 a.m., shut down Webull. And that, again, is a custom rule for me because I'm only trading from 4 to 5 a.m. right now. This is really the beginning of my trading plan. All of that stuff was just kind of like reminders and things that I want to just have fresh in my mind. So all or nothing to our trading. Again, if you watch my live trade recaps, you'll know exactly what that stuff means. Starting account value, I put this up at the very beginning of every month just so I know when I look at where my account is that, I know where I am as far as progress goes. So we're only 4 days into the month. I'm up to 588 now. That's a combination of my P&L, which is right here, minus these 2 stocks because these were freebies that I got. So all of my trading is just from here to here. So if you just subtract this amount, it's going to be like 17 something. I have it on my spreadsheet here. For an account this size, 1768, for an account this size, and being that it's a cash account, and I generally take, maximum 3 trades per day, but I stop at 1 if I get a 2R trade. Here I had 2 green 2R trades, and that's because I started them both before either of them finished. So that's why there's 2 trades there that day. So again, these are good results for a cash account. Shouldn't expect much more than that. Stay away from all stock market news and YouTube channels except Live Traders. So Live Traders is bar none my favorite trading YouTube channel there is. There's another one that I like called Trusted Spots, but that's a little different. It's a guy that trades Forex, but he's really good for learning price action and candlestick reading. But definitely, if you only pick one trading channel to watch beside this one, Live Traders is the way to go. Some of the videos are very long, like this one's about to be, but if you just watch it at 2 times speed, he talks slow enough that you can still keep up at 2 times speed and cut the watch time in half. And that's what I do. So my number one goal for really every month, but since I started this plan back at the end of November, number one goal, no yellow trades. If you look at my previous spreadsheets, not February, because February I was following this plan to the T and I didn't take any yellow trades. And the rule that kept me from doing that was that I would have to stop trading for the rest of the month. But if you see back in January, before I had that rule, I took a bunch of yellow trades. And yellow trades are just simply trades that break my strategy or plan knowingly. Here's a bunch of yellow trades on the, so even if I end the month green, if I have yellow trades, it's not a good thing. And, I got tired of that. So I made it a rule that I can't take any yellow trades. And if I do, then I have to stop trading for the rest of the month. So yellow trade is breaking any of the following rules. Only trade during the pre-market from 4 to 5 a.m. That's when I trade. I went over that already. Only trade stocks in the top 3 volume of the top gainer screener. That's, again, those are things that increase the probability. It doesn't mean that the number 4 or 5 stock isn't going to have a good opportunity, but if it's in the top 3, it's just that much more likely to not only have a good opportunity, but for the trade to work. So I'm just giving myself the best opportunities there are and the highest probability of the trades working out. And it also doesn't mean that just because they're in the top 3 volume that the trades are going to work out, and that's why we use stop losses. Float size of around 100 million shares or less, no more than 110 million. I put that in there. So 100 million shares is technically a medium float stock, but it's low enough when there's volume, especially in the pre-market, that the price can move considerably. And I like to get about a 5% risk on my trade. And you can see that almost always my actual risk percentage, other than that first trade here, is right around 5%. So I'm just following this plan and I'm kind of automatically getting the risk that I want. This one was an extremely low risk, but it still went to 2R, so it was a worthwhile trade. But preferably the risk is around 5%, but I don't really know that for sure until after I'm in the trade. But I know based on experience that if I take the pattern that I do take with the stocks that I trade, meaning these lower floats, that my risk should average out to around 5% at the end of the month on every trade. So stock must be trading higher than the previous aftermarket and intraday trading session. That's extremely important. Let me see if I think I removed the stocks that I traded this morning. What was it? AESE was one of them, I think. I think that's it. Let's put that back on the list and I'll show you exactly what I mean. Yeah. So this is the one. Actually, let's go over to the stocks view because then you can see it. Oh, and it's already up here. You can see it more easily. So let's look at the 5-minute chart just because it's easier to scale out from. And don't pay attention to these indicators. That was something else I was working on a swing trade. I don't use these. So here was let's see, today is the 4th. Okay, so here's where I was trading this morning. And I open it up and I see this big move forming. So the first thing I do is I check to see, is the price trading above the previous session? Yes, it is. Is the price higher than the previous day? Yes, it is. That's enough for me to look for an entry to take a trade. You can go a step further and check the daily chart, which is never a bad idea, but you might miss your entry. And this is today. That would not have been there this morning during the pre-market. All I would have had was this information. So, and it looks like, yeah, I mean, you know, obviously this thing is trending up overall. So the daily chart looks good. You could guesstimate that there's definitely room to get up to this level. And obviously it went higher because that's where my profit target was. So I don't really look at the daily chart anymore because I know that if the other two criteria are met, that the daily chart is going to look good. So I don't need to check the daily chart. So that's it. Now let's go back to the plan. maximum of 3 trades each day. This is, again, kind of a personal thing, but I think that much more than 3 trades a day is not a good idea, especially if you're a fairly new trader and you're not proven profitable more than a year. Then you shouldn't be trading more than 3 trades each day. If anything, a little bit less. But I had an interesting result last month where I had a big loss one day here. I think it was, on the 23rd. I still ended the month green. I actually stopped trading for the month there. It was a small green month, but still green overall. And I learned a lot that month. And on this day, I had 3 losses in a row, and I started to think to myself, maybe I should stop at 2 trades, because if I would have only taken 2 trades that day, this loss would have been almost half of what it was, and it would have saved my green month, made my month greener than it was. And then I looked quickly at my spreadsheet here, and I realized, wow, that would have really ruined the month if I would have done that, because if you look at my second trade for the month of February, it was a loser overall, pretty big loser. And my third trade was a pretty big winner compared to the first trade. So obviously trading 3 trades worked out better than if I would have stopped at 2. And yeah, P&L wise, stopping at 1 would have been ideal, but I don't think that's going to work out overall in the long run. I think the 3 trades thing is going to be the best. And so far this month, I've only taken up to 2 trades, and even my number 2 trade is doing really well. Overall, even better than the first trade, because that was the only place where I had the loss. So interesting stuff, and I'm just going to keep tracking the data, and as long as on average this continues to work out, no reason to change it. I also like the idea of being able to take 3 trades, because if the first 2 fail, then I have a third chance of recouping. Of course, all 3 can fail, but even last month where I was having a little trouble, I only had 2 days where all 3 trades failed. Most often I would take 3 trades and the third trade worked out, which is evidenced by my green P&L for the third trade. So it makes sense. Let's see, stop trading if you make a green 2R trade. This I explain right here. Think about how you'd feel if you give back all your gains on the next trade or 2. You'd be kicking yourself, and you'd be very frustrated, and you get emotional, which is never a good thing for trading. So I just stop and feel glad that, hey, I made a 2R trade. If I can make it on the first trade, even better. So here, if you're in multiple trades at the same time and one goes to 2R before the other finishes, you must stay in the other trade until either your stop or target gets hit, no exceptions. And that could work either way. That could add to your green, or it could make you go red. It shouldn't make you go red, because if you're trading 2R, the loss should be 1R. But it all depends on the risk of the trade you're in. But either way, I think this is the best thing to do, and it's already worked out pretty well again so far this month, which we haven't been trading that often. But I was in 2 trades at once, and let's see, this was the first trade that ended. It was the second one I entered, and that's why it's second on my spreadsheet on this day. But you can see the P&L was tiny because this was a really low-risk trade. And then the other trade that day was my normal risk of about 5%, and I was debating on whether or not I should exit that trade early because it was chopping around. But it's not part of my plan to exit early. My plan says I have to stay in, so there was really no debate there. So I just stuck to my guns, and I stayed in the trade even if it stopped me out and made me red. But luckily it didn't stop me out, and it was my big winner of the day, actually. So, and you can see actually that day is my biggest winner overall so far this month. And that won't always happen, but it happens often enough. And there's no sense in just trying to feel out every single trade. You should just always trade your plan the exact same way no matter what. Otherwise, you're going to put the statistics against you. So if your first 2 trades fail, take the third trade, so as long as it is your setup and not past 5 a.m. Again, these are a bunch of reminders and redundancies built into my plan that, hey, I don't just take 3 trades just because I can take 3 trades. The third trade, there has to be a reason why I'm taking it. There needs to be a setup. It better not be past 5 a.m. because right now I'm not trading past 5 a.m. So the third trade is more likely to work out based on my statistics. We went over that on the spreadsheet. If it's before 5 a.m. and the 2 trades failed, you must look for a third trade, but only if it fits your criteria 100%. Again, more redundancy. This way, there's no question in my mind, what am I supposed to do at this point? So each trade will be 10% position size. Never add to a trade. And then I'm just reminding myself, this is something new I'm doing this month because it actually would have served me better the last few months. When I take a trade, it's based on 10% of my account size. So right now that would be about $58 and change. So each trade is for $58. I used to set Webull up so that when I take a trade, it would just use 10% of my buying power. But that could work against you, because if you're in one trade, let's say I'm using $58, so that means that there's, say, like maybe $530 in the account or something like that. Now it's only going to give me $53 to trade with on the next trade. So the problem with that is, let's say that $58 trade failed and the $53 trade won, it might not be enough to make up for that loss, or it would only make up for it slightly. Whether if both trades were $58, then I would have a bigger win on that second trade to make up for the first loss. So hopefully that makes sense. Back to the plan. The only pattern we can trade, again, redundancy, ABCD and 3 and 4 bar plays. That's an old thing. I really don't do that anymore. This ABCD pattern first pullback thing is even safer and more reliable than the 3 and 4 bar play. And if you see some of my trades, they might even look like variations on the 3 and 4 bar play. So you'll see there's actually similarities to both, but the ABCD pattern first pullback thing is even lower risk than the 3 and 4 bar play. So I generally don't even take 3 and 4 bar plays. If you look at all of my setups, they're all ABCDs. I think at least for the past 2 months, ABCDs. Yeah, everything's ABCD. Now, if we go back to January, you might see something else. Here's a reversal, which is a yellow trade because I'm not supposed to trade reversals. And December, yeah, all kinds of stuff in December. So you see, I'm just getting stricter and stricter about the setups I can take because I know which ones are more likely to work out. So let's see. If an ABCD pattern pulls back below point A, you can't take a trade. So basically, if so point A should be the lowest point, point B should be the high, and then C is the pullback. So if C goes below A, then it's no longer an ABCD pattern by my definition, because now that shows weakness. The pullback is way too deep, and it becomes a reversal trade. So I can't take a trade at that point, and the only way I can take a trade on that stock is if it does do the reversal, makes a new high, and starts a brand new ABCD pattern. So don't think about red or green, just profit at 2R, stopping out at 1R. This is something that I just had to drill into my head the past few months, and now it's ingrained. I don't have to think about it anymore, because I used to weak hand stocks, sell out when they were maybe at 1R or something like that. If they started to chop around, I was afraid they were going to go against me. I would start scaling out, things like that. That doesn't work in the long run. I was either just barely green, or I was usually red doing that in the long run, even though my win rate was much higher because I was forcing trades to win. So the only possible outcomes are stopping out at 1R or taking profit at 2R, and both are good trades. 1R includes your actual stop and actual entry. So that means if I take a little slippage on the entry, I have to include that in my calculation for my 1R and my 2R profit target. And again, a reminder, just to give me confidence, because this is absolutely true, if your entry is good, it will go to 2R most of the time. So there's no reason to play around with, well, I really wanted this entry that was a few cents lower, so let me use that to calculate with, and it'll make the trade more likely to work out. That's not a good habit to get into, because your stop is still the same, and you're still taking a bigger risk than your profit target now. So if there's no lower floats in the top 3 volume, don't trade. This is an old rule, and this applies to the number 2 and 3 stock only now, because I take trades on the first stock as long as it's within my price range, because it's the number 1 volume. Avoid stocks that are trading right around $1. That's for a couple of reasons. Stocks that are trading right around $1 move very strangely, and you also have to take 100 shares minimum, no matter the price or the price that you want to trade with. So that's why I do that. If there's no volume between 4 and 5 a.m., take the rest of the day off of trading. Again, this is like an old rule, but I kept it here because eventually I'm going to go back to intraday trading as well when I have the time, starting in May. So I need this up here to be here when I do that. And this is also a reminder, something interesting happened the week of Christmas. The highest volume stock was only trading with 6,000 shares by 4:30. That's crazy. Usually by 4:05 you have a stock trading with more than that, and by 4:30 the highest volume stock is trading really with like 1 million shares or more. So this was a red flag not to trade. And I took like 3 losses that actually, no, I think that day, because I used to take up to 6 trades a day, I think all 6 trades failed that day. So that was crazy. And that's why this is so important to keep up there. If I see something like that again, I just don't even bother trading, because obviously something is up. That's very abnormal. I haven't seen it before and I haven't seen it since. I'm sure it'll happen again though, and that rule will be there to protect me. Only take the ABCD setup, buying on the first pullback after a new high. Again, this is more redundancy, more reminders. There's going to be no question about what I should do, and when things have failed and when the entry's passed, all that kind of stuff. Don't analyze the price action while you're waiting for the price to come back and break through the previous high. This is again from like an old mistake I made a few months back, where I was trying to teach, and waiting for an entry, and I started saying, well, this reversal probably going to work out, even though I don't normally take it. And I talked myself into taking a trade, and of course it failed. And then I felt really bad that I took that loss, because it wasn't something I normally trade anyway. So that's what that's all about. Always know your stop and your target before entering a trade. That's really important, and you should definitely know that at least visually. Again, let's look at a chart really quick to see that. We'll look at the AESE. So this morning I saw this move, and then on the pullback is where I was looking for an entry. Oh, this is the 5-minute chart. So I was like, this doesn't look right. I was trading on the 1-minute chart. Okay, so here's the move. Here's the move that I noticed, and then this was the pullback. And my strategy is to enter on the first 1-minute candle that makes a new high, which happened on this candle, and then my stop loss is always the low of the previous candle. So all of that stuff I know before I go into a trade. Even if I don't have like the numbers in my head, I at least know visually. And if you watch the live trade recap from this morning, you'll see that I put this line out immediately. So if, let's say, I get into the trade and all of a sudden it flushes down, if I see the candlestick close, or not close, if I just see it even go below that line for an instant, I get out immediately. And this gives me time to do my 2R calculation and all that kind of stuff, and to figure out what the actual prices are. So at least I know visually where my stop loss is before I enter the trade. And it also visually gives me an idea if my entry is right around here, and let's say the price, so see where my cursor is, if my entry is right around here and the price jumps up here, I know that I'm nowhere near 2R, so there's no reason for me to like hit my hotkeys to get out, because I can see that the distance between here and my stop is about equal, which means that that's 1R. So that's what all that's about. And then as soon as I get the chance to, I use my 2R calculator and I get the exact numbers, which then I go by the numbers. All right, so almost done here. As soon as you enter the trade, get your 2R limit sell order out. And again, that's because these things can be very volatile, and if the limit sell order isn't out, you might miss the opportunity to get out. Just let the trade play out. Either it hits your profit target or hits your stop, and no in between. The one little detail that's really important I should mention here is don't just arbitrarily put your sell limit out. If you get filled and the price jumps down far below your entry, don't put the limit sell order out. Get ready to stop out just in case you get stopped out. And then if the price recovers without stopping you out and gets over your position, then you can put your limit sell order out. Again, you may have to cancel it if it comes back down below your position size so that you can stop out. And then this is where like my little quick guide starts. Best setups, pre-market, ABCD, and 3-bar play. We got over, I don't really do the 3-bar play anymore. Stock trading in the top 3 volume. All this is going to be redundant, so I'll let you guys kind of read through this. This is just, again, another reminder. And then here is the kind of visual aid to remind myself of the ABCD pattern and the best, absolute, safest entry that I could take. Let's pretend right now that there is an imaginary line here that separates the aftermarket from the pre-market. And this is the previous low, and this is the high from the aftermarket, and we'll assume that this is higher than the previous day. Otherwise, I wouldn't even be looking for an entry. Let's say right here at 4 a.m., the price starts to run up, just like as it did in the ASE stock. Then I'm now looking for an entry, and here's the first pullback. And as soon as a 1-minute candle makes a new high, I want to get in, and then I ride the stock up to 2R, and that's it. Or I let it come down and stop me out at 1R. So this would be the stop loss here, which would be 1 cent below the low of the candle that a previous candle that I entered on, and my 2R target is based off that risk. And that's it. End of the March trading plan. I have some other stuff in here that I'm not going to share at the moment because I need to revise that for intraday trading plan, which I'll be testing out in May. So that's it. That is my trading plan for March. Hopefully you learned something from it. I know this was a long video, but I wanted to give you as much detail as possible so that you understand everything behind what is going on in this plan and why it's here. So let me know what you think in the comment section below. Hopefully you made it through the whole video, and hopefully this helps you out to become a more profitable trader if you're not already one. Always honor your stop loss, take your stop loss, honor your profit target, and you should be green in the long run. All right, see you in the next video. Take care, guys.